So, good afternoon. We're at the Matthijs Forum. Good afternoon, everybody. I'm joined by no less than 5 experts to have a panel discussion on the theme of payments orchestration. I'm joined by Adam Vissing from Ixopay. I'm joined by Sunil Jhamb from WLPayments. I'm joined by Lochan from Payoneer. I'm joined by Lennart Koopmans of Magnius. And last but certainly not least, Peter Mollins of Spreedly. Gentlemen, good afternoon.
Hello.
Good afternoon.
Great to be here.
So we're going to be, happy New Year to everybody. So let's dive straight into it. And as I said, payments orchestration is a relatively new theme or a new development in the payments industry. There's a lot of definitions floating around. I'm of the opinion that it's a purely gateway functionality that switches payments according to settings or an algorithm. And pure orchestration is acquirer or processor agnostic. And the company you contract with does not even offer that in-house. Any thoughts on that definition? You want to go first, Adam?
I'll be happy to kick it off. So I think you're right on the money, with the independence topic, in the sense that, payment orchestration vendors should not be involved in any sort of actual money flow processing, any sort of acquiring themselves. I think that, from a platform perspective, it is really two things at once. On one hand, a technical consolidation integration platform for end-to-end payment processing, but also a business process orchestration platform. So something that business users within an organization will work with on a daily basis, be that in treasury, risk management, e-com processing. So these platforms, as you say, are relatively new. I'm not a big fan of the gateway term, and I think not many of us in here are, simply because gateway is a muddy term, and I think that's why we're all talking about payment orchestration today.
Okay, I think it's a good nuance. Oh, yeah, Peter.
Yeah, I was just going to build on Adam's point about that business angle. I think that's really important. When we think about it, we often think about merchants, platforms, marketplaces, other payment services that are out there, and they want to grow into new markets, and they want to optimize their transactions and really deliver a great customer experience. And so, like Adam was saying, thinking about it from that business perspective, and every business is going to be different. Their payment strategy is going to be different. Where they are in terms of maturity is going to be different. And so I think that's one of the great things about orchestration, is being able to say, all right, well, your strategy is different. So using orchestration in order to bring in the right services or build the right strategy that matches with what your priorities are as a merchant, marketplace, platform, or service provider.
No, absolutely. I echo that, as Matthijs mentioned, the payment orchestration layer should not be touching the money. Yeah, in order to give an unbiased view, you should not you need to have independent position. You are not tied to any acquirer. So the acquirer agnostic approach is the one which gives you the independent view, and then which actually helps merchants, route their transactions, where they get the better success rate. So the payment orchestration layer, of course, need to present the health checks and then the challenges which acquirers face, and then independently help merchants make their decision.
Yeah, I'd add to that as well, right? It's the discussions that we have are centered around it's any tool or process that we can bring as an orchestration platform that helps them manage multiple payment providers and fraud providers, right? So that comes from the single payment page, the single token vault, it's the smart routing, but it goes all the way through to a single way to refund across any provider, all the way into reconciliation and chargebacks and all of those aspects. So yeah, really any tool or process that is, as you say, agnostic, that allows you to manage those multiple providers is kind of an expectation you should have on your orchestration platform.
Lennart, any thoughts from you?
Yes, almost everything is said, of course.
Yeah, I was going to say, well, has the grass been cut for you, so to speak?
Well, the last speaker of Payoneer mentioned indeed the fact that reconciliation is also very important for a lot of merchants, to understand which money comes from where and to have a good administration in place. So indeed, the payment orchestration is a thing from the last time, But I guess we have a great future in front of us, because we're going to extend our platforms and to optimize it also for things like reconciliation and optimizing your administration as well for every merchant.
And I think, Lennart, staying with you, the last 12 months, the COVID pandemic, has that brought any, besides acceleration into going online, any other changes that you have seen from a payments orchestration perspective?
Well, to give a general overview, the pandemic meant a lot of increase in the number of transactions, indeed, but also a slower decision cycle. So it's a little bit harder to get them on board, the clients. But indeed, there are a lot more transactions in this phase. In consideration, I think it's not about the pandemic. But the people in the business understand payments a little bit better and understand that they don't want to be dependent on only one company, and they want to be flexible, and they more and more understand the power of using a payment orchestration platform, not only to reduce the transaction fees, but indeed also what Sunil said, to optimize the conversion rates and to reduce the fraud. So those are some basic things that I believe that because of the knowledge of the merchants is increasing, they understand the benefits of our new way of business as well, even more. So that's good for our companies to understand and to develop.
I think that's right.
Yeah.
Oh, sorry, Matthijs.
No, I was going to, any other thoughts? So yeah, jump right in, Peter.
Yeah, no, I think Lennart is right. I mean, that flexibility is such an important theme that we hear from the market, and then with the pandemic, then you've got people accelerating their move. And so there's a lot of either trying to replicate what they're doing offline or trying to, pivot and move to an online world. And so the flexibility becomes super important because you want to be able to provide that great customer experience that your customers expected in an offline world. You want to provide, the same or similar, heightened optimization. So being able to flexibly get there under a shortened timetable, that the pandemic has accelerated. That I just want to echo that.
I'd like to sorry, go ahead.
We saw some customers. There's one in my head I think of that was quite happy with waiting for their current provider to get a solution in Brazil, and they were just going to sit and kind of wait for that. But with the pandemic, the volumes were too important. The reliance on e-commerce revenue was too important for the company. So they were like, yeah, let's just go and find a local provider that's going to get us there quickly. And on the other side, the other point that we've seen a lot of is the companies that have previously built orchestration platforms are now kind of saying, actually, we can't keep up with the pandemic ourselves. Like, this isn't the core of our business. This is now like an 18-month backlog to do things in-house. Like, how can we accelerate that? And if it means now buying, that seems to be becoming a pretty common trend across all the ones that have previously built in-house.
And I'd just like to add
yeah,
that
Adam, yeah.
maybe one point that was a huge boost to the orchestration space this year, beyond the pandemic, or let's say in the last year. Of course, any company had to increase its digitalization efforts, regardless of the industry. And a lot of technology vendors across the entire e-com space have been, I hate to say benefiting, but have seen massive growth during this year. One aspect which I thought was crucial was what happened to a very large German PSP around the middle of the year. Because it also sensitized a lot of people to the fact that even very large companies are sometimes not big enough to fail, this was a hard learning sometimes for some very, very large companies out there that had put their entire payments processing in the hands of a single vendor, or maybe one or two, and suddenly saw revenue streams cut off at the worst possible time in the middle of a pandemic that was forcing people to stay at home. So I think that multiple factors came together last year to increase the interest in the space we're all in.
I'd add to that. We saw Slack and its challenges earlier this week. We're a user of Slack. Like, it's not just payments, right? It's Google and Amazon, etc. as well.
No, sure. Absolutely. Actually, last year, Adam, like what you just said, we did experience a lot of course, we all experienced a lot of growth due to pandemic. That was, of course, because of the organic growth, people shifting from offline to online. but we also saw a lot of our business growing due to Wirecard going bust. So it's open. We don't need to mince our words. The German provider, we can just straight mention the name. The whole world knows. And that exactly, we had a lot of our customers who came to us and they put all their eggs into one basket. And when Wirecard going down and when Visa Master shut them for a week, from one day to one moment to the other, all their payments were gone. So their business was shut down. And during that time, actually, I shared my experience on LinkedIn as well. And Saturday night, I got a call from a friend that someone needs the payment, orchestration set up because their merchants cannot process anymore. And in this COVID time, there's a lot of business coming, and then there's a zero payment happening. So this is where over the weekend we had to work in, like a Saturday night, I got a call. Sunday afternoon, we got the payment orchestration set up, the white label set up for them, and then got them integrating as of Monday. And as of Thursday, they were in business, back in business. But there was a very hard lesson they learned, that not to have all eggs in one basket. And there were many more merchants during that time came to us because of that. So it was not only pandemic that helped grow the business, it's also people realize it, having all eggs in one basket or just working with one provider won't cut it.
Yeah, I think that's really interesting, Sunil, because one of the things that I think it accelerated was this notion that payments becomes more strategic for companies as they're moving more and more of their business online. Then the focus on the business becomes more, the focus that the business has on payments becomes bigger. Like I think of a parallel like with ERP systems, where you could just buy an ERP system and plop it down, but as you recognize the importance of it to your strategy, then you want to tune that. You want it to be specific to your own business requirements. And I think it's similar here with payments, where as you get more and more mature, then you want to have that tuning to match your business priorities.
To follow up on that, Peter, do you see a different buyer now than you saw 12 or maybe 36 months ago?
Yeah, and I'd be really interested to hear the perspective of my colleagues here, but really seeing a lot more payments teams coming into fore, whereas if you were to look on LinkedIn 2 years ago, 3 years ago, you might see payments more in the context of, accounts receivable, that kind of payments.
Exactly. Yeah, exactly.
And now entire teams. I mean, you see, payments jobs being posted for directors of payments a lot. So really there's a lot more emphasis within companies.
Is that something that's echoed by the others?
Yeah, sorry, Matthijs. Indeed, what we see is the fact that not only merchants are picking up in their experience about payments, but also other companies try to become a PSP themselves in emerging markets as well. Banks, local players see the opportunity to help their current clients with online payments. So they want to extend their business and want to become a PSP. And that is a really interesting change that I see in the markets, in the global markets, actually. And they indeed don't want to put the merchant doesn't want to put all their eggs in one basket, but the smaller merchants, they don't mind. And you see a lot of new companies want to do online business, and they need to be serviced. And if there is a player able to do that, then you need to have a PSP platform as well. So we see a lot of companies interested in that as well. So to become a PSP and with a good platform, a white label solution, and onboarding all those merchants. And in the back, they can orchestrate the payments as well. So that's a little bit of a different approach than only payment orchestration for merchants. But there's a new way of, new kind of clients coming to this market.
Yeah, exactly.
And maybe I can just add a few thoughts, especially on what Peter said. I mean, in my day job, when I have to qualify new opportunities, new leads, of course, the presence of someone with a director of payments, a head of payments title within the organization that is contacting us is always a good indicator that they have reached a certain level of maturity where they recognize the challenges that they're facing, and that they're better informed about what they are looking for, which of course makes all of our jobs easier, but also increases the potential that they have to actually improve on their current situation and grow ROI. I would still say though that there's many different kind of buyers in this space. Very often, especially with historically grown setups, buyers are coming from IT organizations. So the poor sods at the very end of the decision chain who have to deal with all of these integrations that they have on a technical level and are just seeking to ease that pain. Of course, treasury departments, account receivable departments that are facing trouble with reconciliation across sometimes 50, 60 different providers worldwide are also typical buyers. But I would say there is a wide range, and we definitely do see this trend very strongly in Europe, that payment professionals, people coming with a payments background from the payment industry, are moving into merchant organizations, bringing that know-how with them, and knowing all the ins and outs, are looking for solutions that help them maybe make use of the minute differences in pricing, in service levels, in feature sets that different providers are offering. And they need a platform for that is, as you said initially, agnostic.
Yeah.
Any observations? Yeah.
I just. Oh, go ahead, please.
Sorry. Okay. Thanks, Peter. And exactly what Adam was saying, actually, or Lennart also mentioned. Yes, we do see a change, but the change is very interesting. Actually, we had one of our partners who joined us. They had their own development going for so many years, and they gave up. They couldn't keep up with the development because they lost their lead developer in the middle, or something else happened. So they lost a lot of money. So they just decided to take the WLPayments as a white label solution, so they can focus mainly on the acquiring side and also servicing their merchants, and want to stay away from technological challenges from their end. Similarly, what Adam was talking about, a lot of payment professionals, they are getting into the merchant servicing. So they want to service merchants, on the commercial side, having the relationship with the acquirers and all, but they don't want to handle any technology element of it, especially with the 3DS2, there was a big challenge upgrading the APIs for a lot of these other acquirers who were still not ready. So this is something which we see a shift. It's more like a cohesive partnership which being formed. Now the payment professionals who want to focus on the merchants and focus on the sales side and merchant services, and let the partner take care of all the upgrading of the APIs, technological challenges, coming with new features, reconciliation of or payment orchestration there, any of that stuff. That's what we see more like a trend in the market.
I'll just add to what you're saying, Sunil. Interesting that accelerating pace is really a driver that we see. Like for merchants, it may be accelerating in terms of time to market. They want to get into markets quickly. Platform is kind of a different side where they're looking to onboard new merchants themselves onto their platform, and so the accelerating pace means that that's just a limiter on their ability to grow unless they can quickly add connections to other PSPs.
So leading off that point, Peter, so we've seen new buyers, we've seen new buying reasons. Have we also seen a different expectation in terms of ROI?
Has that changed? The way I guess I come back to the customers themselves, and as that maturity increases, I think there's just that diversity of need, because people, each company is so different and their go-to-market is so different. The diversity question keeps coming out. So what is the ROI that's demanded? I think there are a number of different categories of ROI for sure. Things like optimization, as Sunil mentioned, and things like time to market, as Adam and Lachlan were particularly talking about. And I think it just varies. There's a continuum for different players, because every company is going to be unique, and that's kind of where payments orchestration came from in the first place.
Yeah, I think
Lochan.
I fully agree with Peter. Right? It just depends on what the needs or the ROI measurement is for each of the individual companies. What I think we're seeing a lot of is there's a bit more of a focus in this year or last year around what the ROI should be, right? Like, this isn't something that they're just going to go out and buy and just say, hey, this is going to fix all of our issues. It's now about, right, if we're going to do this, is it going to meet our initial goal? And then we've got 2 or 3 kind of sub goals that we really want to be hit as well. And I think previously you might have had like a head of payments, director of payments that was really the one that was focused on those. Now we're seeing in the rooms like the CFO, the CTOs in there actually being like, hey, is this hitting the ROI that we want it to? Because it's becoming such an important factor of their business, right? If you have 100% of your revenue comes from online, if your main goal is to reduce net payment cost by X amount, that's going to be something you end up putting on your financial reports at the end of every quarter. And I think that's now we're getting to have that value within those companies where they're saying, right, this is such a strategic initiative, we need to focus on this. And I think like we see that a lot, but yeah, as Peter says, it really varies in your maturity and other aspects. Like to the other extreme, we had one customer who they ended up getting an incentive from one of the schemes that multiple times paid for the costs of an orchestration platform. And that was as far as they needed to go in terms of an ROI. So it really varies depending on the type of customer.
Yeah, that's right. So I need to add a little bit as well. The reason for a lot of companies to start out with a payment orchestration platform, that is one, and to see that as the ROI, that's fine. But I think there's a message to be sent out to the merchants, in my opinion, that increasing the approval rates is giving them a lot more revenue. And unfortunately, I see a lot of them focusing on the reduction of the transaction fees or adding new methods in other countries. So those are two major reasons to use payment orchestration. But I think and I believe that the real cool stuff is the improvements of the approval rates. Now, the increasing approval rates is giving you a lot more revenue, right? But that is not totally understood yet. So I think there's a role to be played for all of us in this meeting to tell a little bit more about this kind of improvements that can help them.
I mean, one point that I'd like to just piggyback on top of what my colleagues have already said is something that I tell all of my clients. You know, one aspect, of course, of payment orchestration that I think most of us cover, all of us cover, is centralized tokenization of payment instruments, be it credit cards or other types of payment instruments. And you know, when people are thinking, you know, yeah, I need to increase conversion, of course, you know, I need to grow my top line, have more revenue. But a lot of people are hoping for payment orchestration topics such as smart routing to significantly lower their fees. When you have control over your customers' credit card data, you can go to your main acquirer maybe in any given region at the end of the year and just ask them, well, what have you done for me lately? You know, your biggest competitor is offering me a better deal, a couple of basis points less, and my volume is this. So, you know, it's an easy decision. I don't have to do any sort of smart routing for that. I just need to make one well-timed phone call at the right moment and let that person know that I have something at my disposal that lets me instantly shift my volume to somewhere else if I feel like I would get a better service or a better rate. And that possibility in itself is often enough to shave off a lot of fees off of my yearly transaction processing costs. So I think that there's really many ways to increase ROI, but as most of my colleagues said, it will really, the ROI that I achieve will really depend on the maturity level I'm at, what kind of business I'm in, whether I am super sensitive to cost, you know, what is my average transaction value and so on. It will depend on so many factors that it would simply not be serious for me or anyone here to tell you 127.5%.
No, all right, excellent.
Sorry, go ahead, Matthijs.
Yeah, Sunil, go for it.
No, actually, what we see is as ROI from our side, you know, like we always talk to our customers and it's written all over our walls and our DNA as well. The whole objective is like for our being in business, we grow when our customers grow. Simple as that. You know, when we align our interests like that, you know, so then the ROI discussion go away and it's like, okay, how can we together grow? You know, if I can help you grow, ultimately I'm helping myself in the process, you know, to grow. So this is something which resonates better with our customers and everyone. So we don't much have any price discussions kind of thing. Most of the discussions are, okay, yeah, how can we grow now? You help me get 5%. Now, how can we get to another level? How can we optimize this? How can we get to the new market? How can we do this? You know, this is more like, okay, they involve us in the strategic planning, you know, and then we see a lot more, you know, once we help them, and this is like a joint effort kind of thing, you know, what is their strategy, where they want to go, in which market and stuff. So this is where we help them and that kind of a growth they are expecting. So, and if there are new feature they are looking to be developed, so we help them with that kind of stuff. So we aligned our interests with them. So basically then it's the ROIs for all, you know, so we all are having a lot of returns on that investment.
All right, I think very good final thoughts, Sunil. Thank you very much. Thank you very much to Peter, Lennart, Lochan, and Adam, and of course Sunil for being on the panel. I'm afraid the time is up. That was, I think, the enemy from the beginning. So I want to thank you very much. To all the viewers and listeners, all the panelists will be on the platform, so feel free to contact them with any questions you have. Gentlemen, thank you very much.
Thank you.
Thank you, Matthijs.
Thank you. Bye-bye. Bye.